Today we're going to be doing that technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and even NVIDIA. And then at the very end of this, I am going to take you through today's data and tell you why we possibly got this little sell-off here. Before we get started on the SPY, I just wanted to bring up HYG and the SPY next to each other so you could kind of see both at the same time here. And just this is something that I mentioned a couple episodes ago, and I mentioned that we were approaching this gap up here, and you can see that HYG, we actually are not even close to that at this point. And if we even actually look at kind of a divergence that is happening here, we can look at this point here that is last Friday, right? And we see that we're moving upward on the SPY. Meanwhile, we are actually having a downward trajectory on the HYG. So a lot of the time, when you do see divergences between these two things, one of them is wrong, and most of the time high yield growth is right, and high yield growth could be right in saying that we actually need the SPY to come down in the near future. Now, that's a good thing to pay attention to, but for today, I am going to give you guys a thumbs up on the SPY, okay? And the reason I'm going to give you guys a thumbs up on the SPY is just because we've been mentioning how we don't want to start going long in this area, okay? You're approaching that weekly expected move. You're hitting the top of that. You would rather start to enter into longs down at the bottom of that, or maybe even when you start to take back the 9-day moving average. So give yourself a thumbs up and a pat on the back if you did pay attention to that information. And now we can go into shorter time frames and look if there was any structure that could have hinted us that this sell-off was coming. So you'll see as I pull up a 30-minute on the SPY, we can start to see this double top really forming up here. Okay, you have these two highs right up in here, and then you can see the MACD here actually giving you a very, very steep divergence here. Okay, very significant. And we are now testing the bottom of that broken double top. So we have to see if there's going to be further downside tomorrow. It's totally possible for tomorrow to have one more pop up, but note that if we do get out of that weekly expected move tomorrow, it is very, very likely that we end up back in between these two purple lines. So as you can see, I've updated my drawings. We have kept this trend line between our two highs up here, but now we are adding this one down in here, kind of just to give us some direction. Maybe this is going to give us some kind of hint of where stocks want to go in the near future. I do believe that there are only a couple scenarios that could play out from here. I believe that the bullishness in this move might be over and we are going to see downside. But the question is, are we going to come down a little bit and find some kind of lower high, then extend to higher levels? Or are we going to see a full reversal here and then give ourselves some kind of divergence down here to then give us another pop in the market? That's something that we have to see if it's going to play out. And I'm going to tell you that I am very much so leaning towards this scenario. So as far as this scenario plays out, the reason that I'm leaning towards it is because as the stock market starts to drop over the next week or so, people are going to start to say the Fed is going to raise rates and things like that. And then the Fed actually could come in and surprise the market by pausing or, not lifting those rates again. So I believe that that is 100% on the cards here. That is kind of a theory, but overall, we want to be paying attention to if we make a higher low, or if we do extend to those lower levels and then give some kind of divergence. If that divergence does play out and then we do get that pause, I do believe the bulls can start to get a little excited and we could see actually a full bull run into the end of the year. With that being said, you can see the Qs, and the reason that the SPY most likely doesn't have more upside is because if we do on the Qs start to extend out of this level, you can see that we are squeezing pretty good here. Okay, we're squeezing pretty good. And if we squeeze even more, you're asking for a bigger drop off. So it actually would be better for the overall market to want to pull all the way back and gain some more buyers in here before extending to higher levels, because this move is pretty rapid to the upside, especially if we get out of this in the near future. Now, that brings up something very important. We've been talking about this low, and I've said, okay, I'm going to be very bearish when that low is broken. But if we are able to, come past that low just a little bit, and then we see that divergence start to play out to the upside, I am actually going to get extremely bullish. I believe that we could see some sort of pause or something like that with the Fed in the near future, and that actually could lead us to that bull run that leads into the end of the year. You have to think right now, at the last meeting, they were talking about how the Fed is could raise rates in November. So if they state that they are going to pause possibly at the end of this month, then we could see some kind of pop in the market. I don't know exactly how this could play out in the Qs, but we could see something like this or something like that. That would make a lot of sense to me. And then we can look for some kind of, small divergence down here on the MACD. And I believe that that's a 100% a possibility that we come and this starts to roll over, and then we just start to move to higher levels very quickly. The only other thing that's kind of could happen from here is if they do decide to raise rates and we are at these downward levels, we actually could see that crash start to play out. And I don't think that would happen at this point, but we want to be open to it just in case. So now it's not so much if this low breaks and closes below this low, it's more if this structure here starts to break and we close below that with a pretty definitive bar, and we don't get any kind of buyback in the next like day or two after that happens. And one stock that's really convincing me, it at least needs like a pullback. We said that a lot of the time we do like to come up out of this zone and then touch the top of our purple zone to then fling higher. I believe that, Apple has actual potential to come to the actual bottom of this zone. And then maybe that would be our higher low scenario that can extend us to the upside. But overall, I am leaning more towards a full break of this, even possibly breaking below its 200 and then buying up pretty quickly. And that would set up our divergence once again on Apple. And if you have a triple divergence on Apple, then this thing can really get moving into the end of the year. And you can see how fearful I am if this actually does keep extending. If we start to keep extending up into this zone up here, this old zone that we were talking about a little while back, a lot of sellers are going to be in this zone, and we could see an absolutely sudden drop from this zone. So I'm really hoping we don't get there. I think it would overall be healthier for the market to actually pull back again and then get some more steam, get some more buyers involved, and then we can have some confidence maybe going into the end of the year with a good bull run. I just wanted to take this point to note that I am mainly going over daily charts today because you can see how overextended all of these 2-hour charts are, all of these 1-hour charts are. We need some kind of pullback for this to be healthy, and that's why I keep stating how I'm not going to be happy if this thing starts to squeeze even higher up. So I do believe that we are going to see some sort of pullback back into our purple zone, whether that sets up a lower high or a higher low, and then we can extend higher. I don't necessarily know, but I just wanted to let you know I am leaning more towards a full pullback in this in order to go get more buyers, and then maybe we can see a run. I'm going to pay a lot of attention to if the Fed is going to raise rates higher or if they are going to pause. If I can see and they state that they are going to pause, then I'm going to be looking for that bull run into the end of the year. Now, see, I had the CPI marked, and we've had that marked for about a week and a half, and I told you guys this is what I believe would give us some direction. It's not necessarily going to give us direction on Tesla, whether or not we are going to get out of this zone to the top or out of this zone to the bottom. I do believe that Tesla will need to do the same thing as Apple in this case, and the CPI did give us some direction here because we are breaking this recent trend. So if we do continue to see downside, we would be looking to maybe even come all the way to the bottom of this triangle before we see a total reaction to go to the upside. I just want to emphasize, I am really leaning towards a bull run to the end of the year, and I think that would fake a lot of people out. On Tesla, I would really just pay attention to down in this area, or if we are able to make some kind of, higher low, and then you can maybe see this start to curl back up. You are in positive territory on the MACD, on the daily chart here. So if we do see some kind of, sudden drop and then we start to curl back up, that actually isn't the worst news for you bulls out there. As to where that, higher low scenario could set up, I'm looking at this golden pocket in here, somewhere around that 248 to 247. Okay, so if we do see a very sudden drop and we start to gain some ground from there, and these signals actually, I assume we are going to get a sell signal. If we do start to drop like this, then we are going to get some sort of sell signal, but that could turn back around and we could get a buy signal over here. So that's what I'm going to pay attention to. But for the most part, I am still leaning towards that bottom of the triangle getting tested, and then we can see what happens from there, and we will update you daily on this chart. So come back around tomorrow and the next day if we do start to see sudden drops, and we'll go into shorter time frames and see if we are seeing some bottoming out. one stocks candle that I'm really paying attention to is Amazon. And we can see Amazon giving this big wick off the 50. That is a very, reversal sign here. So we actually could see, and there's a ton of resistance up in here. So we didn't go fill that gap yet, but maybe we'll fill that in the near future, maybe by the end of next month or something like that. But right now I am seeing a lot of sellers in this area, and it looks like that data wasn't good enough to get us to go to higher levels. And we're going to talk more about that at the end of this video. So stick around for that if you want to go through the data with me. But I do see some structure forming here for a bottom, but I believe we do need to come down into lower levels. And you can see how, steep Amazon is right now, like how steep this downturn could be to give us that kind of, that divergence, right? And Amazon's been moving pretty quick. So we could see a, sign of a drop of somewhere about 12% in the next 1 to 2 weeks before Amazon can find some, ground and actually give us divergence that then gives us that reaction to the upside. It's just something that I'm paying attention to. Also on Amazon, I do have my monthly risk ranges here at 137.33 and 116.87. So if we do come down into this level or even break below that level, before or at the, in the middle of this month or before the end of the month, we actually could see Amazon start to make a recovery to get back in this zone. NVIDIA, I'm going to give us a thumbs up. We've been talking about this ABC pattern, okay? So give yourself a thumbs up and a good big pat on the back if you were trading NVIDIA, because we can notice here that when we started talking about that ABC pattern was somewhere around, Monday, October 2nd. And then we can just see and measure this out and see if that actually played out. And look at that, almost to the, penny, we almost played out. So if you were paying attention to this and you do like this information, maybe give this, video a like or something like that. But as always, thank you for subscribing. Now we have to see, is NVIDIA, I do believe we are going to violate all of these moving averages to go find some more ground. And maybe this would be a good fake out, okay? What if Amazon comes all the way down? What if Amazon comes all the way down to the bottom here where this head and shoulders is placed? Now, if that does happen, you're going to see shorts start to skyrocket up if we do start to approach this pretty quickly. And something that could actually fake everyone out is if the Fed decides not to raise rates in November, and then we can see that big reaction come in Amazon. So I do believe that that is a potential scenario that is on the table. We have to see if it plays out. Just like all the other stuff, we could see NVIDIA actually make some kind of, lower high or higher low as well, and then start to extend to the upside with a, daily A, B, C pattern. Now, I am leaning towards this scenario. I think this scenario here would fake a lot of people out, and that's exactly what the stock market likes to do, especially if you are considering that we might be in a bear market right now. We've seen, a big move in a lot of these tech stocks, a lot of these semiconductors. So we could see this come all the way down into this area. And I believe that will be a pretty good investment as long as we are able to hold up above that level. So if we are able to hold up above that level, which is even sneakier, okay, I want to show you how sneaky this could be. This low here does not touch the neckline. So the fact that if this did come all the way down into here and cross this low, you could see a lot of people shorting because you came below the previous low and now you're going to make a new one, right? But then at that point, if we do get some good news, then we could see some kind of reaction. And that is the scenario that I'm leaning toward on NVIDIA. Yesterday, we did mention the VIX, okay? And the VIX here, the main thing that we were saying was in order to see a bigger run here, we need to get below that 50. And what did we do? We came below that 50, but then we closed the day above the 50. So overall, I want to be paying attention to if we do get that full closing bar below the 50, but you do have that retest that's on the card. So if you do come out of this pretty quickly, we actually could see a quick reaction and get above 20. Overall, what we're looking for on the VIX to see a major sell-off is if this 200 here starts to really flatten out and even start to curl up, and we see that this 50 actually crosses like this. If that starts to happen, then you are, the actual crash possibility is back on the table. But also if that happens, that just means volatility is going to be in this market. So we could see a volatile way up. But overall, I am leaning towards that bull run into the end of the year, which means we might see volatility spike back up over the next week or two, and then maybe we can see that start to fall off with some kind of daily divergence here. Something that the market really didn't like, and maybe it's just the bond traders reading the data a little better. I believe we did see this double top actually play out its full measured move here, but you can see this is a big bar. So you're expecting a sell-off when you get that rapid growth in the 10-year yield. It's not necessarily if the 10-year yield is going up. It's more about, is it breaking this hold high? How fast is it going up? Are we seeing 3 big days in a row go up? So if this continues to go up, then we are going to see more dramatic selling in the market. If we see this go up and then it starts to maybe drop in the near future, then we could see that, you know, maybe that divergence starting to play out on the daily charts, and we could start to move upward and give us that bull run in the end of the year. Just so you know, if this does start to skyrocket upward and then the Fed comes out and says they're going to raise rates even higher, that's going to be very bad news. So we are in a state here where there is a scenario of a crash on the table. It's just not necessarily what I'm leaning towards right now. On yields, I'm more leaning towards some kind of rapid move upward and then some kind of crash down in yields with a short little daily divergence here on the MACD and the RSI. So that's just what I'm leaning towards on yields. And if I just flip over to TLT, I didn't really prep for this. You can see how bearish this bar is. And overall, it's kind of the same as HYG. And let me just erase this real quick. But it's overall the same on HYG, right? We're looking for, here's like a gap, right? So we're looking at the SPY, and the SPY was actually approaching, I think, this gap all the way up here. But you can see, you know, we're not even close to that on TLT. So these bond traders are very smart. They know how to read data. And so I overall believe that on TLT, we are at least probably going to come down to that price point of 82.50 that we've had marked for a couple weeks now before we start to see TLT pop and those yields start to drop off dramatically. Thank you so much for making it this far. Now we're going to get into some data. Okay, so the core inflation rate month over month, we came in completely at consensus and forecast. Core inflation year over year, we got 4.1. So that's going to be right in with consensus. Inflation rate month over month, you know, 0.4, it's pretty much in consensus. Inflation rate year over year, 3.7, which is pretty much in consensus. So the overall reason that you would see that hip fire move upward, which was what I was worried about. I really thought if we got some kind of move upward today, then we would be in a bad spot. I wanted us to read this data as, oh, this was okay, and we need to consolidate. If we would have consolidated here, we would be at good levels to get, you know, some kind of flagging, even with some consolidation on the daily for a little bit, and then we could maybe move to higher levels. But bond traders see this data, and all we have to know is this data here is not saying that things are getting better. Things are still up at 4%, 4.1%, right? So they're not getting better. We're not seeing initial jobless claims come in higher. We're just not. So when you read this type of data, you need to think of, you know, how the market is reacting right now, but how they should be reacting as well. So if these would have gotten some beats here, let's say this came in at, you know, 3.7, then you would say, oh, this is going to be a good move, and then maybe we can move up, consolidate, and keep going. But overall, right now, you're getting it at consensus, which tells us that the raising of rates is still on the table, okay? And so until the market sees or the Fed states that they are not going to raise rates, that is going to be in the minds of a lot of traders moving forward. And the fact that bond traders saw it and they see that drop, right? They're just a little bit more hesitant to get into these types of moves, while the stock traders really want to buy before they get the data. So we bought before we get the data, and now we have to pull back to lower levels in order to even out until we get further news whether or not we are going to see these rates get raised. So if there's one thing that I would like you to take away from this little part in the video is just, I know you're reading the data, right? You're reading it, you're like, we're coming in a consensus, that's a good thing. But you have to understand we're already moving in a direction that was banking on us coming in at consensus. So in order to actually move higher, we needed to beat those numbers. And so TLT traders and things like that will bring us back to reality. And that's why we are probably going to see some kind of pullback to set up a higher low or even move to lower levels before we get some kind of news that tells us that, pausing is on the table. Sorry, it's a little dark in here. It's a little rainy today, but I want to say thank you for making it this far in the video. The overall takeaway from this video is we're most likely going to head to the downside. Okay, I just want to state that tomorrow we could get like one of our subscribers here. Thank you for commenting. We commented back and forth a little bit today, but he's like, tomorrow could be choppy. And that's exactly right. We're seeing some indecision on a few candles here. So we could see a choppy day tomorrow, but just know and mark that, weekly expected move, for the whole week. And we could see us come back into those levels by the end of Friday. So the end of tomorrow, we could end up back in that zone. And overall, we will need some kind of pullback from these levels before we move higher, because raising rates is back on the table. Thank you guys for making it to the end of the video. I really, really appreciate it. Please give me a like if you found any of this information helpful, and I wish you all the luck in the world trading tomorrow, all right? Make sure to have a good weekend, okay? Don't take any trades that are just gonna piss you off for the whole weekend, okay? Have a good weekend. Good luck trading tomorrow. Peace.